The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. If you have any questions, it's 877-927-6648, and we are starting the commodity report. Just another announcement, I will not be on the show on Monday. I got some family business to do, but I should be back on Wednesday without any trouble. Now, well, we started the show with a potential 786 retracement coming in the euro at the 132.33 level. We went through the 618 very quickly with those real wide-ranging bars. So, kind of keep an eye on that if you have an interest in, scalping something in the euro. It should be interesting. I also posted the chart for the DBA, which is the commodity ETF that we keep an eye on, and it's completing that 61% retracement. And we're at a major spot in all of these commodities. We've been talking about the bottom in corn and beans and also wheat, mainly corn and beans the last few days. We've had some really substantial rallies, well over 30 cents in both of those. And so the problem is that we have something very unusual going to happen tomorrow, and I don't know how they come up with this stuff, but in the middle of the day at 11 o'clock Central Time, an hour and a half after the opening, they're going to bring out a crop report, and it's one of the major crop reports of the year. In fact, it's the final one. At the half hour, I'm going to have Rich Anderson on of Anderson Capital Management. He's been a friend of mine for well over 40 years and certainly is he does not only hedge fund stuff, but he does his own ranching and his own cattle operation and everything, so he really knows the ins and outs, and he really understands this report. And this is an unusual report, folks. It's an outlier event. They're bringing it out right in the middle of the market, which I don't think is fair at all. Usually they're brought out, used to be the night before, now they bring them out a half hour or an hour before the market opens, and it's going to be so wild in there tomorrow. Unfortunately I won't be around to watch it, but it's really going to be crazy. I'll report on it, on next Thursday's show, but it's going to be crazy. Well, at the half hour, Rich will come on, and it's going to be a real interesting report that comes out, and he'll tell you about the other stuff. I've been talking with Rich quite a bit over the past few days just about this, but I wasn't aware until just a few minutes ago that this report's going to come out during market hours. I don't understand who made that decision, but, that's the way it is. But it's going to be crazy because there's going to be stops on both sides of the market. And they'll probably hit it on both sides. They'll hit the stops on the upside and the stops on the downside, probably within an hour or less, and then the market will go to where it's supposed to go anyway. But it still looks like, that it's very interesting that it wants to move to the upsides in the grains. There's something that's happening on the climate thing that we need to watch, and that is Australia is in the midst of a drought of unprecedented, the fact they haven't had a drought like this long before satellites. So it's incredibly hot all across Australia, which will affect the wheat, of course, and so that it hasn't affected our wheat, of course, but if this drought continues, it eventually will do that. So we'll keep an eye on that also, because remember we had a drought last year that we saw coming in pretty nicely, and that held, it turned out to be correct, and we did get a huge rally, and there's a very strong probability that we might get back-to-back droughts this year because of the fact that it's happening in Australia and a tiny bit in South America. But South America is lucky because they have more water, more available water than we do. So that's something that we want to keep in mind. Now, I want to share with you something that I got from one of our faithful subscribers in the Tiger Den, Mr. Zitow. He brought to my attention the fact that, that lumber had made some, really, big moves. And so what I did was I decided to do a little bit of research on my own, to see what I could see and verify what he was looking at. So I went back and I did a long-term daily chart on lumber, and it really shows some incredible patterns that I think we'd all be interested in seeing, because it tells a little bit about the structure of the market itself. It shows all of the ABCD patterns that are there. It shows the ratios of 618 and 1.618. But the main thing is from 2009, when we had our bottom of our recession, the market had a huge rally, and if you'll look at those yellow markings that I have there, it shows that each of those retracements came down to either a 618 or a 786 retracement. But if you'll look real closely at the cycles at the bottom, those are one-year cycles, and you'll notice on the first cycle that the market crested on the far side of that cycle. That's known as right translation. That's very, very bullish. On the second cycle, it crossed right at the middle. In other words, the top was made almost in the middle of the one-year cycle, and then the market came down and made a 61% and 786 retracement. And now where we are, we're almost exactly at the middle again of the last cycle, of the last one-year cycle. We're almost in the middle of it, and we're completing several numbers up here in this 377 level. 383 level was the high, and we've dropped well over $1,300 in a matter of a few days in lumber. So there's a potential there for lumber to make an interesting high. Now, what is interesting about this is that if you want to make a comparison, all you have to do is to compare this with the S&P 500, and I'm going to put that into the Tiger's Den and let you folk and the Tiger TV and let you look at it, because this has a incredible correlation. The correlation is well over 90%. And as you can see, stocks have rallied, lumber has rallied. Stocks have not made new highs above 2007, but lumber was able to make highs above 2007, even in the midst of the worst, housing crisis that we ever had. Now, part of that problem is because many lumber people went out of business, during that 2009 down move. Between 2007 and 2009, lumber lost more than 60% of its value. So a lot of the lumber producers, people that cut the wood and, get it ready for building, were out of business. So that was part of the problem, but the correlation has been incredibly high. Now, if you take it one step further and think that maybe there's a possibility that lumber could be topping, and you have a correlation that is, very, very high with the stock market, that would be very indicative of a potential for, a pullback in the stock market, which, because of these gaps, as you know, I've been talking about them, I don't believe the market's going to run away from here. Now, since we are, talking about the stock market, and I'm not going to be here Monday, I wanted to mention that that big cycle that we're looking at comes in between Friday and Monday. Friday we have the new moon, and that could be on one day either side, so either the 10th or the 14th. But we have a pretty big cycle date on the 14th. There's a couple of smaller cycle dates that happen on the 15th or 16th. So by Monday or Tuesday of next week, if we start to fill the gaps in some of these stocks, stock market indices, then that's going to tell us a great deal. On the other side, on the flip side of the coin, if we start breaking out and gap up again into new high ground in the Dow Jones and the Russell and the transportations and some of these others, then all bets are off. But these gaps have a high percentage of filling them. Well over 90% of all gaps are filled. So this is what I'm trying to show you. Mainly with the lumber, it basically shows you the correlation with the stock indices, to give you an idea that there is patterns in the market that are completing. And even though lumber is not a huge market, it is still large enough that you're able to, see that it has a tremendous amount of correlation, with the stock market. Now, we have another market that we've been talking about for a few days, especially the last few days, is because we're completing a 61% retracement in crude oil. It's made an ABCD Gartley cell pattern up here at the $94 per barrel level. And, this is where there should be some resistance. But if this does not hold, if we get much above 94.90, that means we're probably going to go up another $2 a barrel to 96.73. So this is why we watch these numbers, to see how they work. Now, someone asked me a question about, why do prices go up to a certain level and then just seem to stop? And every time the market goes up, there's resistance for selling. And on the same token, when markets pull back, there's all kinds of people buying. And the reason for that is, folks, they're called resting orders. There are people out there, very large hedge funds, large mutual funds, and large private traders that have orders setting in the market that literally will absorb it anytime selling comes into it. They have orders setting right there to do it. When I traded on the floor of the Merck, back in 1981, I was watching. It was 1982. I was watching, to see how, the decks where the people held, the floor traders held their decks, to see, where these orders were. And of course, these decks were very well protected. Now, one morning, when I was getting on the elevator a couple hours before the open, I always got in early to get my work done. But they would pass out to all the floor brokers their equity runs. Any equity runs were usually one page, like mine was, to, a big trader would have, maybe 4 or 5 or 10 pages. Well, I was on the elevator, and Reggie, I knew Reggie from Lynn Waldock, and he was on, and he was carrying a massive thing, a printout of these old IBM, sheets that would print out. And it must have been about 8 inches thick. And I said, boy, Reggie, I said, it looks like you're going to be a lot of delivering this morning. And he said, no, that's just going to one trader. I said, Reggie, I'll give you $20 if you let me look at it. And he said, if you give me 20 more, he said, I'll print you out your own copy. And so I gave him $40. He went up and he gave me the copy. I'll tell you the name of the trader. It was Dollar Bill. Anyway, he's one of he is still the largest trader down there, and he has his own clearing firm. But what I did was I went back to my apartment in McClure Court, and I went through all the trades that this guy had been in, and he had literally 35 to 40 pages of trades. Most of it was short bonds from the $5 level. Remember, this was 1982, and bonds were, I think that the British pound was trading at about 240. So he had sold it around the $5 level, and it was now around 240. Plus, he had huge positions in gold. He had huge positions in the Swiss franc, and all of them were very profitable. And the total number of profits was in the millions of dollars. Many years later, about 20 years later, I was in New York, and I happened to be on a panel with him. And while we were sitting up there waiting to be interviewed, I told him this story, and he laughed. He said, that happened all the time. And I said, well, I know that, and he laughed. I said, I never told anybody about it. And he said, well, it's not uncommon knowledge, so I did share that. But these stops that they had on the floor were very, very well protected. But that's why these resting orders will be in there. In other words, you'll watch something go up to a level at a certain area. We got to take a little break here. When we get back, we're going to talk a little bit about the gold and silver before we have Rich Anderson on.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th, and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week, with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com, or check them out on the NYSE Amex symbol GPL, or on the Toronto Stock Exchange symbol GPR.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks. And when we were on the show yesterday, the gold was backing off to the 1653 level. We pointed that out as being a 61% retracement of the previous low, and that we had a higher bottom. It offered a low-risk buying opportunity, and now we're up about, $20, a little over $2,000 on this. And so whether you took the trade or not is unimportant, because if you just understand that these higher bottoms come in at usually retracements of 618 or 786, that's something that you can use. What I try to do is just give a few examples while I'm on the air. Some of them work, some of them don't. That's indicative of everything we do, because it's all probability based. It's never based on the 100%, but it does show that these ratios work pretty well. If we can get gold above $1,700 an ounce in this run, it's got a tremendous chance because of the fact that we hit that 1630 level, 1627 to 1630 level that we waited for very calmly for about 8 weeks, and we came down and hit it exactly. And now we've, rallied just about $50 an ounce in a matter of a few days. It's only been 4 days. So, and gold, as you realize, once it starts to move, can really move very, very quickly. Now we're going to look at the wicked stepsister of gold, which is silver. It's about 1/6 the volatility of gold, and we've had the same thing occurring with the silver market. I put in a 60-minute chart on silver, and it shows the higher bottoms that we've been having, and the red line that you'll see is the actual gold market. And gold has been pretty strong, but silver on a percent basis is actually rallying better. The sell-offs have been a little bit weaker, and which is good. That tells you that it's strong, and then when it starts to move, it's moving very quickly. So this is what we're watching, and if we can get silver above 31.50, it's about 70 cents away, and if we can get gold about another $25 higher above the 1700 level, it's got a chance to really run, just because of the fact that we've had such a tremendous run. Now silver has a lot of things going for it on a technical basis. When you look at the daily chart of silver, we had double bottoms back in September and December of last year. We had another triple bottom in the early part of the year at the $26 per barrel level. We were per ounce level, and now we've had a perfect ABCD Gartley form at the 29.20 ounce level, and now we've rallied about $2.60 off of that. And if we can get silver above, the 31 level, there's a chance that silver could easily make, $39 an ounce. And that would be equivalent to gold making new highs, I believe, would be above 1930 or so in the gold, if that, in fact, does happen. But the key is getting gold above $1,700 an ounce and silver above, $3,100 an ounce. They've made the major bottoms. I don't think there's any question about that. They both hit the exact 61% retracements that we were waiting for. Silver came in at around 29.40 or something like that. The low was 29.28. Gold was at 16.29, and the low was 16.27.90, and it's rallied $50. That tells you that it's pretty much in the ballpark. But boy, folks, if these things go below those numbers that I just talked about, 16.28 per ounce in the gold and 29.40 in the silver per ounce, this will be failures in these patterns, and you'll be looking, at much, much lower prices. But frankly, I don't know how you can be bearish here. It's done everything, but send a band out to tell you that it wants to go higher. I know that the crop report tomorrow is going to be, quite crazy. And when Rich comes on in a few minutes, he'll tell you how crazy it is, because you won't believe, what happens after these reports. And we've never had one in the middle of the market, which is totally insane. I mean, the people in Chicago that run the Merc, they got to be on some kind of sauce that they're not giving to the public, because that's not it's not fair to anyone. I mean, you should let the market, when you have a major report, let people look at it and discuss whether they want to do it. But in the middle of the day, when stops starts to get hit, it has nothing to do with anybody knowing that the stops are there. It's just that one order triggers another, and one order triggers another, and they get to the point where there's no other orders, and then they go down and do a thing in the opposite end. So it's not really fair, and that's my opinion. I'm going to get off my soapbox, but that's what we'll be watching. It'll affect everything just because of the margin that these people have to use when they're trading. I know the smaller traders, we have margin, things that we have to work at too, but these large hedge funds, they have to keep cash in reserve in case something goes wrong, and they have to really be careful. So I'm expecting some really wild stuff. Got to take a break, and then we'll have Rich Anderson on of Anderson Capital Management.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're back, and I think we have Rich Anderson on the line. Are you there, Rich?
I am, Larry. How are you doing?
I'm good. Listen, you and I have been chatting over the past few days. Can you tell the folks what's happening with the crop report that comes out tomorrow?
Well, the crop report's going to come out for the first time at 11 noon Eastern Time, 11 Central Time, during the middle of trading day. Normally, it used to come out at 7:30 in the morning while the markets were closed. This is going to make for air pockets. I mean, to think that you can have a stop in, that stop could get run by 10 or 15 cents either direction. And frankly, some of the electronic platforms don't allow for a fill if it's more than so much away from the price. So
that's very
unless
important.
You're feeling very lucky, yeah. I wouldn't have positions on.
Well, I don't plan to, but could you explain to the folks that are listening what that means by these air pockets with electronic trading and the rules they have set up? Because that basically makes those orders stop limit orders, doesn't it?
Right. And so the people will complain if they get filled 10 or 15 cents away from the market, and so most electronic platforms have a percentage limit of how much they'll allow slippage in that order before it just
Oh my God, I wasn't even aware of that, Rich.
Your platform may not have that, but
Yeah.
it's a concern, and if you're in the grain markets tomorrow, it's at your own peril. I think the opportunity exists to put your orders in above or below the market and fade whatever sharp direction it has, knowing that 5 out of the last 6 years we've gone limit up or limit down, 3 limit downs and 2 limits up, and it's also been in corn, and it's also been very dramatic in the soybeans. You got to tread carefully or use options. I do a lot of options, as you know.
Sure. But I like your idea of going on the high end and the low end and having orders setting there, because what will happen is this vacuum on the downside, once those orders get filled, it just snaps right back.
Absolutely.
Into normal
there's where
trading.
the real opportunity is.
Yeah, I agree with that. Now that comes out at 11 o'clock Central Time.
11 Central.
11 Central, and basically tell the folks what this report is and what it's going to be affecting.
Well, it's a quarterly stocks and acreage report and a production report release. And so it'll tell us how many acres were harvested in last year's crop for both corn and beans, and what the yields were. Now, the bulls will tell you that we had the worst drought since 1950. Therefore, we couldn't have harvested as many acres as the government says. They got us harvesting 90% plus. In normal drought years in the 80s, we were harvesting 84, 85, 86%. So you could lose 1 million acres, if the wildest bulls had their way. There's huge ranges in the guesses tomorrow, and so I expect there'll be lots of opportunity. Volatility just in the last week and a half has gone up maybe 10 points on corn as an example, and that volatility, once the report's out and everybody knows what the numbers are, will start to dramatically fall off.
Can I ask one other question, Rich? If you were looking for a support level in, say, March corn, what would you be looking for?
I'd be looking at the previous lows. You've done some excellent work with your videos recently. I'd be looking at the previous lows for the support, and I'd be looking at resistance, initial resistance, at the gap area in the March corn is roughly in the 730s.
So we'd be looking down about 20 cents, and
right.
If those stops were hit, you'd be looking, I would say, 673 in March corn. If you could get that like 25 cents lower, you'd be buying a big AB equals CD pattern, and, that wouldn't be a bad place. But, boy, I'll tell you, you'd have to use a stop of about 15 cents if the market's going to be pretty crazy, wouldn't you?
Right. What most of the professional traders do these days when a market opens during trading is they let the dust settle after the first 2 or 3 minutes.
Yeah.
Because the numbers come out one after another, and the first number might be friendly, and everybody's getting excited, and then the next number's negative, and they're disappointed. So seriously, it's a different ballgame when you're trading in the middle of the session having a report. So the professional guys will tend to step away from putting positions on, and that makes it all the more thin, and treacherous, dangerous, whatever word you want to use.
Well, I laugh because you and I have been through so many of these reports over the past 40 years that nothing ever really changes. But what really surprises me, Rich, and I wasn't aware of this, that some platforms have limits on whether a person can be filled, and that basically means if they put a stop in, it's no longer a stop, it's a stop limit order. Right. And if it goes through the limit, I mean, in the market was either really bullish or bearish, they're going to still be in, and there's nothing they can do about it. With a regular stop, even though you get a terrible fill, at least you're out of the market, and you know where you stand.
Right. So you need to know what what the settings are on the platform that in the firm that you're clearing through.
Wow, that is amazing. I would guess that people that have interactive brokers, make sure that they double check that if they're in the grain markets, because the fact is that interactive brokers, the way that they set their orders, the person that built that program was not a trader. I can tell you that, because they've got it set up just backwards the way it should be. But anyway, it's going to be pretty interesting, tomorrow, and that comes out at around 11. And
11 o'clock sharp.
Mm-hmm. Now, I have another question. How do you feel how this will be just probably the opposite effect will happen with the cattle? Is that pretty much what usually occurs when we have these?
Yes, most likely it'll have some influence on the cattle, have a lot of influence on the feeder cattle. If the corn prices drop, the feeders would rally. If corn prices go up, feeders would go down, and if the corn prices go up, cattle are likely to go down, and if the corn dropped a lot, it helped the cattle some. The other thing that's going on is that
the last time we had you on the air, which was back around right before Christmas, you said that you thought the cattle were getting ready to sell off, and they've already sold off well over $1,400 a contract, and now they're continuing down. We're down like 5 or 6 days in a row. So I'm looking at support in cattle around the 130 level, about 5 cents lower. Do you think there'll be support around that level?
In what month are you talking?
In April cattle.
April.
Yeah.
Yeah. I think they have. Well, the April cattle right now are 135.15, and I think they have value down in there. Frankly, the low last month was 134 and change, and that's where the guys will start having some interest in them. But yeah, 132 even would be a real opportunity. Now, the other key variable in the cattle over the next 3 months will be the weather, and if the weather stays as nice as it's been, these cattle gain much better than they normally would when they're fighting snow and mud. Mm-hmm. And that's the only thing that would change the negative.
So, in other words, when the weather is nice, they gain weight a lot better, and they're not fighting the elements like humans do, and so that would mean that they would gain weight, and the price or the cattle would weigh more, bringing more beef to market. Is that correct?
Right, which would be the depressant on the prices.
Uh-huh.
And the other thing that is that the cattle are the top end of the budget, and so the housewife, now that she's getting X percent more taken out of her check from the tax increases, will be more likely to shift down her purchasing to the cheaper meats rather than the most expensive. So that might also be a drag on the demand for the cattle.
Okay.
So it's
I wish I was here tomorrow on the show so we could see this tomorrow unfold, because it's always going to be crazy. That's for sure.
Yeah. So just I want everybody to know, be careful.
Yeah, I think the main thing that the folks should know, and I wasn't even aware of this till just now on the show, is that some of the trading platforms have, things set in their computers that if you put a stop in, let's say you put a stop in on corn at 580, and it went to 575, and they have a fail-safe that says you can't get filled within 5 cents of your stop. I mean, it could open at 570 and never look back, and you think you're out of the market, and you're not. So effectively, your stop order has become a stop limit order. And stop limit orders, as a professional trader, are absolutely worthless. You don't ever want to use a stop limit order. A stop order wants to get you out of the market. I mean, stop limit order, you're just trying to shade chickens, and that's not good. I mean, you want to be out of a market if your position is wrong. You don't want to shade whether it gets out at 579 or 575. You want to be out.
Right. So you need to know what your firm's platform is like.
Wow.
Not all of them are like that. Some are, some aren't. So you need to know what you're dealing with, and if you haven't never thought about it, it may be time to think about it with the report coming in the middle of the day.
Yeah. Whoever decided? Do you have any idea, Rich? Who decided at the Merc that we're going to do it in the middle of the day? Is this just to create more volatility?
I imagine I'm sure there was a pit committee, but the report's released by the USDA, and so the USDA took the advice of the Mercantile Association, CME, in deciding when to release it. So it was a committee making recommendations to the USDA because it's a government report, and the government's the final decision on when they release it. But they, in the old days, when we closed at 6 in the morning, we reopened at 9:30. Well, then they could give you a report at 7:30. But now, we don't close, and so they're thinking at least everybody's at their screens trading at 11 o'clock, whereas some people aren't necessarily at their screens trading at 7:30 Central Time. I would assume that's the logic. I don't know.
Yeah. We've been through that logic before several times. It didn't work either. So, hey, Rich, thanks for joining us today, pal, and I'll have you on really soon, okay? And Happy New Year to you and your family.
You bet. Happy New Year.
Okay, bye-bye.
Bye-bye.
Okay, well, that's what I'll report on this next week when we're on the show. You know what happened with the crop report, because it's probably going to be pretty crazy no matter what happens. Someone asked the question when we were on yesterday. Someone, I believe it was our friend David from Florida. He talked about natural gas, and we were taking a look at that. It was trading around the 311 level, which was the 61% retracement coming off of the last cycle low that we had last August 17th. And now we've rallied about 7 cents a square foot in the natural gas futures. That's quite a bit money-wise. And so if you happen to be in that, you certainly don't want it to go below 310 per cubic feet anymore, because that would tell you that the pattern is most probably, not ready. Someone just asked a question about, how do I know whether my platform is going to have a limit parameter on a stop? And I don't know. I was not aware that they were allowed to do that, because a stop order is filled when a stop order is executed, it means that the price that you have put your stop in, let's say you have a stop in the S&P at 1462. If you have a buy stop at 1462, once that hits, it becomes a market order, and you should be filled either up or down. You can sometimes get filled better. Mostly you're at your price, sometimes a tick or two worse. That means you're out of the market. Now, a stop limit order means you put a stop in on the S&P at 1462, and you put a limit in at 1463. In other words, you can't be filled any worse between 1462 and 1463. Well, what happens if there's nothing but buying, like there was on January the 2nd, where the market opened and gapped up, and if you had an order to buy at 1462 and the order opened at 1472, 10 cents higher, and they have something in their platform that says you can't get filled on the S&P without 5 points. In other words, you're filled at 1462. The worst you have to be filled is 1467, and you open at 1472. You are what they call in the trade hung out to dry, because you're still short. You're not in that. The only way you're going to get filled is if the market backs down to the 1467 level. Then you would be filled, because that's what they set up as a limit. This is a very, very bad order. It should not be legal, but illegal is a sick bird, so they can do whatever they want. But I wasn't even aware of that until this show. So you've got to really double check to make sure that your platform, does do it that way. If you do have that problem, I would really love to hear from you on an email, just to see if it is a problem that deserves major attention. The problem with some of these platform folks is they're built by software programmers who are not traders, and they're not aware of what these orders mean when they're in the market, and especially a stop limit order. A stop limit order is just horrible. I mean, there's just no way that you should be looking at a stop limit order. There's just nothing to make it think it would be the same thing that what we deal with anyway each day. Now, I want to just show the folks, the longer term patterns, because we got to take a break here. Wow, this is going fast. Okay. Holy Toledo.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, folks, we'll end the Futures Hour with two things. I posted into Tiger TV the soybean chart, showing the 61% retracement that we've had, and the fact that we've had a pretty nice little rally of about 30 cents a bushel. But we have this major report coming in at 11 o'clock Central Time tomorrow, which is going to be very interesting, as we talked about before. Okay, we've got a call from Steve in Massachusetts. Are you there, Steve?
Yes, I am. How you
what
doing,
can I do
Larry?
for you, my friend?
Yes, I want to ask you, I made a trade yesterday. I bought the double short materials, SMN.
What does that mean by materials? The materials for building and stuff?
Yeah.
Okay.
And I put it in yesterday afternoon. I got it at 49.69 this morning on the open, which kind of surprised me because I wasn't expecting it to go that low.
Okay,
and,
I sold it. It hit 49.50 was the low today. Is that correct?
I believe it's up in the 50s now.
Yeah, it's around 50.12 as I see it right now, huh?
Yeah.
What can I help you with, my friend?
Just thought about. I was going to ask you where should I put my stop?
Well, there's a big gap up here at 51.79, so you've got to risk about 3% when you're trading a $50 stock So I would say around 51.82, something like that, is where I would put a stop. But this is not a. I don't like selling into weakness, of course, but this stock, if the ABCD is correct, takes you all the way down to 37. So that's nothing wrong with that. I mean, you're risking $1.50 to make $17. I don't like selling into weakness, especially after 5 days. But the market is very overbought in general, and this is certainly they're way behind the market. I mean, it's certainly not following the market. So that's telling you that it has a bearish buy. This looks like Apple almost, but Apple hasn't broken below 500 yet, but it has a lot of similarities.
Oh, this is a double short materials.
Double short materials. It's double the price. Okay, yeah. I understand the materials part. So this is an ETF, and it's double weighted to the short side.
Right.
Okay, this is why it's so much weaker. I understand. Well, the price objective on it is still around 38. So it's trading at 50. You've got 12 points potential profit with a buck. Let's say about a $2 risk. So that's 6 to 1. I mean, that's a pretty good risk reward ratio.
Oh yeah, really good.
Yep.
Okay.
The only thing I don't like is selling into weakness. I would have rather sold it when it was up around the $65 level, when we had the little Gartley pattern that formed up at that level. That would have been the really nice time, to take a look at it, because that was the best place to look.
Well, I understand. So I got one more thing.
Absolutely.
I sometimes buy coins through the U.S. Mints, and I noticed that in 2012 that the gold proof eagles are at an all-time low, mintage-wise, and also the first spouse coins, same way, they're at an all-time low, mintage-wise. And I actually bought one of the first spouse coins, the 2012 coins, for Francis Cleveland the other day. And
well, I agree with that. I try to buy something every month, either a couple silver coins or gold coins or whatever. I've been doing that for a long time, and I like coins anyway from the numismatic point of view. But when you buy a silver coin, you're buying 1 ounce of bullion. And I like silver just because it's in smaller increments and stuff. But I agree people should learn to do that, and that's just a safety mechanism, because you remember Gresham's law, the bad money will drive out good, and we certainly have a lot of bad money with the debt that's out there, and that's what's driven out. We got to end the show here, my friend. Happy New Year to you, and thanks for calling in.
Happy New Year, Larry.
Okay, bye-bye.
Bye.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. Yeah. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.